What deregulation? There was no deregulation. So take us through deregulation.
Is that Joe?
Yes.
Joe, if that were only the case, frankly, it's objectively true that the financial industry was both massively regulated after the Great Depression and during the Great Depression, and that they were deregulated in the 80s and 90s. A few very quick examples. There was the Orwellianly named law called the Commodities Modernization Act. And essentially what happened in 1999, what the Commodities Modernization Act did, was it essentially deregulated all derivatives, which is why today we have a $700 trillion derivatives market where there's zero transparency and zero regulation. That's because of a law that was passed. I think I said 99, it was in 2000. In 1999, there was a law passed called Graham-Leach-Lively, which also deregulated the markets. Prior to that, one of the key parts of that was to take down what's called Glass-Steagall. Glass-Steagall was one of the most important rules passed after the Great Depression. What Glass-Steagall did is it separated what everybody thinks of as banking, where banks take deposits and they make loans for small businesses to people like Roy and others. And that was the banking part of the financial industry. Separate from that was what's called investment banks. They do trading and investments, often high risk, high rewards, but high risk. Glass-Steagall separated those two so that the risky activities of the banks could not threaten the actual bank loan part of the banks. That law was taken down. It was put in place in 1934. It was taken down in 1999. And that's why one of the reasons we have these huge, too big to fail banks, because they're both banks making loans, having credit cards, and they're trading in investment operations in high-risk derivatives and other activities. All of that happened because of deregulation. Now, people can argue about the effects of deregulation, but there's really no argument that deregulation happened. And again, I want to emphasize, this is not owned by a party. This was a bipartisan activity. Keep in mind that the money, power, and might of Wall Street is not partisan usually. It goes to where the power is, and it doesn't really care who's in power. It just wants to buy the favors that it wants. And it got a big return on its campaign contributions, its lobbying, and its influence activity because they did deregulate the industry. And that deregulation led very quickly to the financial crisis. As I said, we had 7 decades of protection of our economy and financial system after the Great Depression, and then until about 1999-2000. And it took about 7 years for Wall Street's basically financial wilding to undo all of that.